Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Let's take a look again at the Japanese yen. Well guys, yesterday we have seen the first attempt to bounce up on the Japanese yen since as we discussed during the weekend and on yesterday's trading session. In general, this thrust up looks like the nice setup for possible Jordan and bread and butter trade on the weekly time frame chart. The target of this pattern could be, as it's suggested by the Jordan framework, should be the 618 resistance of the whole move to the downside. And this stands around 103.65. That is the 618 resistance of the whole move to the downside. Now we see the bounce to the upside. And the major question here is whether this bounce up is just a respect to the significant support areas, or you can see this is the 50% support 101.20. That is the monthly pivot support one, the 1618 major extension, ultimate extension of this A, B, C top pattern. Well, it's almost the daily oversold. It's really significant support area. And whether this bounce just a reaction on the support, or this is really the starting point of the move right to the upside, right to this area. As we said yesterday, that current move down in general in Japanese yen and other safe haven currencies, the Swiss franc, the stock market, could have the fundamental basics. It's not just a technical issue, and this could be the result of some money flows on the global economy, since now the concerns on the stock markets in the United States have increased significantly. That forces investors to think on the safety of its assets that previously were put in the stock market, and now this perspective of the stock market now seems blur, and that's why it makes investors to think about the safety of their assets and put them for some time in the safe haven assets, such as the safe haven currencies and gold market. We see that the gold market shows the upward action. And as we said yesterday, the ETF gold funds report on the increasing of the inflows in the gold funds. So maybe our analysis of the gold market, long-term analysis, will be confirmed. The market really will show the significant retracement on the long-term charts. We will see. But the major conclusion for us from all this stuff is that the fundamentals currently could overrule the technical issues. So if we wouldn't get the fundamental impact of the money flows, we could say that we even wouldn't think about the possible failure of this pattern, and we just start to trade it and be focused on this target and so on. But as we said yesterday, be careful with this trading of the BNB. Despite how attractive and how perfect it looks like, the fundamental factor could overrule this and could dominate over the technical issues and could lead this pattern to the failure. That's why I have called you yesterday to protect your profit as soon as possible when you will take the position. So currently the situation from the technical point of view looks so that I do not see any reasons and signs that bread and butter has failed already and could fail. In fact, market has started move in the direction of the target, and this probably the market really could reach this area. But again, control your position and control the risk. Now if we take a look at the forward time frame chart, we see our butterfly. That is the target of the bread and butter. Okay, we see this nice bearish divergence with the MACD. This first bounce up of this long-term bear trend on the 4-hour chart. Market has hit first fib resistance 101.80 approximately. The next level will be 102.40, 102.55 is the confidence resistance. That includes the major 3.8 resistance. That will be the next destination. If you have taken the position yesterday as we have suggested, then move your stop to the to the break even, or at least tight your stop, because as I said, market should not return right back down, because from the technical point of view, from the market mechanics, and from the current development of the situation, as it should develop, market has no reasons to retest this area, because the pattern already has been formed. Market has hit already the 1618 target on the daily time frame chart, so there are no targets that could stand below of the current lows right now. So no magnets, no reasons for market to retest the previous lows, since nothing calls market to the downside. If it has started move as a retracement, this retracement should continue to the target of the bread body trade. That's why I think that it makes sense and could be reasonable to move your stop either to break even, or at least tight your stop closer to this previous lows. Well, because as I said, since the risk of the failure and risk of the fundamental factors domination right now is very significant, that's just, we need this step for our safety. If even we will become right, market maybe just stop out us on some break even and will continue move higher. Well, this sometimes happens, but we will be protected against the possible unwelcome action to the downside. And in general, our major analysis suggests searching possibility to take the short position on the longer time chart, since we expect to see some bearish reversal pattern on the monthly chart of the Japanese yen, and the current trade is that just, if you could call it, the addition to the monthly scenario, because weekly chart suggests some retracement to the upside, and we just use it as the tactical issue. That's not the strategic trade. That's mostly tactical trade. It is not based on some long-term charts. It's just based on the specific technical nature of the markets. So when the market forms bearish engulfing, it's in the most cases shows some retracement back in the body of this pattern. And as we have got the monthly bearish engulfing, this trade is just an attempt to make some money on the weekly retracement inside of the body of the bearish engulfing pattern on the monthly time frame chart. But our major pattern is the reversal on the monthly time frame chart. Our major position will be positioned to the downside. We just need to get the level where we would like to take it. And as market has formed some reversal patterns on the daily time frame chart, on the 4-hour time frame chart, very probable that market will show some deeper retracement to the upside, and why we should not use it for trading. Because speaking from the daily time frame chart, we have the bullish setup. We have the retracement right from the strong support, and we have the weekly directional trade on the long side of the market, and directional overall trend, because as you can see, the trend on the daily time frame chart is bearish. Well, that's in fact all that I could say based on current situation in the Japanese yen. The situation is developing according to our expectation by far, so we will see what happens next. But I hope that bread and butter will work, and we will be able to get the reasonable profit from this trading. Currently, it develops, could say, nice. On the hourly time frame chart, I would like to show you another picture. I do not want to say that it has to happen, but I see that this could be really the pattern that could lead market to the target of the bread and butter trade. So you can see if market will show some sort of the reverse head and shoulders pattern, and this, or for instance this A, B, C pattern, the target of this pattern, if we suggest the same harmony as here, okay, the target of this pattern will be 103.88. So if we'll take a look at the target of the bread and butter, it stands at 103.65. It's very close to this area. So I can't exclude that this could be the issue if, as I said, technical factors still will have the possibility to work as it should, if it will not be pulled down by the fundamental factors. So let's see what will happen. Again, just want to call you again to control the risk and protect your position as soon as possible, so the technical situation will allow you to do this, and just continue to watch for Japanese yen, because Japanese yen is one of the currencies that carries really thrilling potential for trading, especially on the long-term charts and even right now. So this market is really interesting right now.